Good morning, investors. My name is Louis from the COSEC research team. Today is Monday, the 14th of March, and here is your pre-market wrap. On Friday, the Australian stock market ended 0.9% lower at 7,062. While in the United States, all three major benchmarks ended in the red as the US and Brussels announced new sanctions against Russia. This week, investor attention does shift to the Federal Reserve, where the central bank is widely expected to raise interest rates. That's after the US posted yet another 40-year high inflation figure just last week. Technical analyst Mark Newton from Fundstrat has commented how the relentless volatility in US equities continues to make buying the dip difficult in this ongoing downtrend. Further, he has stated how many failed rallies last week has put lower levels on the S&P 500 on the radar. This leaves the market's fear and greed index in a state of, quote, extreme fear. While in Europe, the Stoxx 600 rose almost 1% after comments by Vladimir Putin that there had been positive negotiations with Ukraine. Nonetheless, according to Bank of America, European equities just suffered their largest weekly outflow ever of approximately $13.5 billion. While in Asia, Chinese tech stocks continue to fall and show no sign of slowing. From their peak, they are now down 61%, suffering a loss of $2 trillion in market value. And in commodities, the price of oil regained some of its losses from last week, jumping to $109 per barrel as inventories of developed economies such as the United States continue to fall. Iron ore, meanwhile, lost 1.2% and is now trading at $154.5 per tonne. Finally, for this morning, our SPY futures at 0.28% higher at 7,071. This market wrap has been brought to you by COSEC, Kadari Securities.